think about it a little bit. So I want everyone to do a little thought experiment and think about yourself at 90 years old. Maybe you will still be surfing. Maybe you will still be driving. And if you're not, maybe there are certain activities that you'd really like not to miss. And maybe that's about pets. Maybe that's about plants. Maybe that's about something in your life that brings you joy and something you enjoy. And by the way, put dark chocolate on my list.
Did you plan for this, or did you miss when life demands answers you can't dismiss? Will you be ready when the trumpet blows? Do you have the blueprint for life's unknowns?
Welcome to Plan for This. I'm your host, Marguerite Lorenz, and I'm with my friend, Bowtie Tom Summers. He's an independent insurance agent. I've asked Tom onto the show because I really want to help us understand more about not only the products, but also some of the thinking behind planning ahead and have some of Tom's experience here with us today. Hi, Tom.
Hello, Marguerite. How nice to see you again.
Nice to see you too. You have a very sporty bow tie today.
As always.
Hence your nickname.
Some days more sporty than others.
Yes, that makes a lot of sense. Tom, would you share how we've come to know each other and a little bit of our history?
Yes, it goes back quite a long ways. In fact, I think uh, our relationship and my relationship with Lorenz started when your mother first started the firm as a tax firm, and because you were located in my town of Fallbrook, I called on her as part of my life insurance sales activity when I first got into this career, which was a late second career for me. So I was already 55 years old when I started doing what I'm doing now and have been doing now for more than 15 years. But I think our relationship started with my meeting Jane, your mom, calling on the office in Fallbrook. That was before you guys even moved down here to Temecula Valley. And I think it was through her that I eventually met you. And we've done some business and some referrals over the years. But most of all, I think most of our interactions have been in networking groups that you either started or acquired and ran and grew over many, many years. And I was part of the estate planning group network actually before you, Marguerite, acquired it and started to grow it. But I first came to it I don't even know how I found out about it. Somebody told me, and we then became much better acquainted over the years as I was a part of that group when you moved it to Temecula and opened up different locations. So it was a great way to meet some local professionals who have some of the same interests that I do in working with the senior community and providing good advice to members of the senior community and who are also looking for other resources in the community to bring to bear on problems that some of our clients were experiencing. And those networking groups were a great place to share experience and to discuss case scenarios that you put together many over a number of years.
Yes.
And collaborating on those cases and discussing the problems was a great way to get to know other people in the group. And because of that, we developed a certain amount of trust. We did business together. We helped each other's clients, and that developed over a number of years. So I really did appreciate that a lot. And I think it was I don't think, I know, it was those groups that drove into my mind the importance of planning ahead and doing an estate plan, and why that's the unselfish, generous thing to do for your family, to look ahead and put that kind of thing down on paper and make your wishes clear and put together a toolbox for your family to follow and use after you're no longer around to ask them or to tell them what to do or to ask them to tell them what your wishes actually would be. And so it was really thanks to you and thanks to those groups and those conversations that I finally overcame some um, communications issues in my own family, and my wife and I went to an attorney that we also met through these estate planning group network conversations, and we did our estate plan. I'm very grateful that we did, and it's probably about time that we went back and revised it again, but at least we did it.
I'm so proud of
And
you. I'm so happy for you that you did.
yeah,
Yeah.
well, it was really important, and of course, having done it and derived some satisfaction out of doing our own family's estate plan, it's a lot. It's natural for me to mention that to my clients as well. So I always have a list of attorneys that I know personally that people can choose from to go out and do their own estate plan. But I do tell people why it's important. Anybody who has a child or a house has to have an estate plan.
Well, how
So
about just having a body? I think everyone who has a body needs an estate plan.
yeah, well, I'm sure that's true. But if you have children and if you own real estate, you definitely need an estate plan.
Yeah,
So
that's true. That's true. So, I know that you've been going through your own experience dealing with your mom. And if you wouldn't mind sharing with us a little bit about what that experience is, I understand that she's reached 100 years old.
yes, which I always thought would be a great thing, but now actually witnessing it, uh, I'm not sure how much actual satisfaction she's, getting out of her life now because she's suffering from some dementia and fears that go along with that and anxieties, and those are getting in the way of her enjoying the situation. But what I would say, especially about my mother, is that thanks to really my relationship with you and what I learned from you and from the conversations in those professional networking groups over the years, I when my mother was doing her estate planning or continuing to revise it and refine it, she asked me to be the executor of her estate. And based upon conversations that I had had with various people in these groups and with you yourself and um, many others, it was my opinion that that really wasn't the best thing for our family. And so I declined. I told her I didn't think that that was the best solution. And I recommended that she get a private professional fiduciary to serve in that role when she was no longer able to serve. And I recommended a firm that I know. I recommended your firm. And my mom, being my mom and who she is, she went off and found somebody completely different,
Good for
which was
her.
okay. Which was okay. I mean, that actually that in a way that served my purpose even better than if if she had just chosen somebody that I suggested. I think it was actually better that she used her own initiative and went out and found somebody, also somebody maybe geographically a little bit closer to her,
Sure.
but as far as I know, a reputable, good person who's serving in that role now. And what really came home to me, and this is more than 10 years ago that she asked me to serve, probably closer to 15. And what my feeling about it is that I'm so happy that I had uh, that knowledge or that experience that was shared in the networking and study groups that you helped to organize, and that when she asked me to be her executor, I knew I didn't want to do it. I mean, I knew that it wasn't a good fit because I didn't want um, I didn't want to be under that pressure. I didn't want to have that responsibility with respect to my two siblings, and I just I just didn't think that it was the right thing for our family. So now I'm really, really happy that she has a private fiduciary. He's actually paying. She's not able to do anything for herself anymore. She can't
Right.
do anything physically for herself. She can't anymore take responsibility for paying her own bills. And it's actually been for 3 or 4 years that that became more and more problematic. But now she's simply not able to do it. So
But at
it's
least until age 96 or 97, it sounds like she was able to manage mostly
pretty
and then
well.
was
Yeah.
willing to have some help. Did you feel any guilt about not taking the job or not wanting the job of being executor?
No, not at all, because I honestly felt that it was the best thing for our family. I discussed it with my sisters, and um, one of my sisters, the youngest of the three of us, is serving as the power. She has the power of attorney for health decisions,
Okay.
healthcare,
Okay.
and now that well, which was a good fit, partly because of her personality, partly because she's a retired teacher, and teachers are naturally caring people and people who are pretty well organized. I thought that professionally and temperamentally, she was suitable, and she was comfortable with that. And also, my sister's daughter and grandchild live in the same town with my mom. So
Well, that's super convenient. That helps a
yeah,
lot.
so she doesn't, she does come and visit, and she has another place to stay. She doesn't have to stay in my mom's house all the time. And she's the one who supervises the caregivers. My mom, as she wished, is still in her own home. I'm not sure that she understands that all the time.
Sure. She might not at
Uh,
this stage.
she, right, yeah, she doesn't seem to. I'm not sure what she thinks about it. I know she wants to escape from it sometimes,
Yeah, that's
which is sad,
understandable.
which is
Yeah.
sad though, because that's what she wanted. And but to stay there, she requires 24-hour care.
Okay.
She has three caregiver, well, more than three, but there are three shifts of caregivers. There's a
Wow.
regular one for, the regular 8-hour daytime, and then there are others who come in regularly and take the other shifts. And it's my sister who directly supervises that care.
Well,
So
thanks
I
for
think I
bringing
think
up
we're set up.
Yeah, thanks for bringing up that particular point because I have a little visual to share. Now, your family may not be paying exactly this amount, but I wanted to keep the numbers simple and I wanted people to kind of see it. So I'm going to hold this up and see if I can show these numbers to you, if you can see that. So we've got at-home caregiving, an hourly cost in California, and I have it down as $50 a day, $50 an hour. $50 an hour for a caregiver who is supervised, background checked, works with a care agency. Care agency is managing all of the employment rules and all of the tax rules. So, for those people who think they could just pay the neighbor's kid to come in and be a caregiver, you really don't want your household or your family being the employer necessarily. But I wanted to give you this visual. So we're looking at $50 an hour equals $1,200 for a single day. And that could be 3 shifts of 8 hours. That could be 2 shifts of 12 hours each, right? Then we've got $1,200 a day times 7, so we can have a per week price, which is $8,400 a week. And then we've got 8,400 times 4.3. 4.3 is the number we use to average out the number of weeks, right? Some months have exactly 4 weeks. Some months might have 5. So this is a way for us to make all the months the same. So you're seeing that number is 36,120. And then you times that by 12, and we've got a whopping $433,440 per year. Per year. And for a lot of the clients that I've had over the years who've insisted, I want to stay in my home no matter what. That's been the phrase, right? No matter what. And, that's a pretty broad expectation, isn't it? You might need an ambulance ride because you're really in a lot of pain and you can't manage the pain at home. And you've got to go to the place where they can do that for you. And maybe surgery is necessary. And we can talk a little bit about hospice and we can talk about some of the other services. But Tom, I wanted to get your take on kind of how your family's managing and maybe what things your mom put in place to make this manageable now, and what your thoughts might be for somebody who has maybe a house that might be worth $500,000. Maybe they've got some money in a 401k or in some kind of IRA. Let's say that's $100,000. And let's say they're still working. What do we do? I mean, the cost of having care in your own home is astronomical. And who knows what prices are going to be like next year?
Right, yeah. The costs here in California are very high. Those numbers are actually higher than the ones that I've had in my mind, in my imagination, or that I've been sharing with clients recently. The people we have caring for my mother are providing 24-hour care at a lower cost than that. But to be honest, I don't know um, exactly how they're set up, and it's my sister who engaged them and is supervising them. Even so, it comes to a lot of money. I mean, it's $15,000 a month. What we're doing, I guess we're getting a fabulous uh, value for our money, um, which is good to know. But the costs are very high. And I did speak with my mother because I'm in the life insurance and long-term care insurance business and have been for 15 years. I did approach my mother about getting long-term care insurance, but she never really had any interest in doing it. So we don't have that for her, unfortunately. I think now, of course, all of us wish that we did, but that wasn't done. But my mother was very frugal, and she was a good saver. She had her money with a professional portfolio. She has her money with a professional portfolio manager, and that portfolio manager happens to have a relationship with her fiduciary, and I would guess, although I don't know for sure, I would guess that my mother found out about this her particular professional fiduciary from her financial advisor. They're all, kind of in the same geography. So I feel confident that that's where she would have found out about this person. So they're coordinating now on paying my mother's bills, and so far, her plan, such as it is working. I mean, I don't know the exact state of her finances because my mother never shared that with me or with my sisters. We're kind of, we're providing companionship and services and hand holding and visiting and telephone calls,
And
and my
love.
sister's, yeah, and love, and my sister is supervising the caregivers and did have a role in that, and she's the one who called me up and said, I think we need to look into hospice for mom. And I helped her to find and get connected to a nonprofit hospice in my mother's town.
Hospice has
And
been so amazing for so many of my clients. Such a sweetness.
they're doing a great job. Just to give you an idea, in our area, there's a very reputable hospice, again, that I know about from our networking groups, called Hospice of the Valleys. I, I I know people there. I know one of the doctors there, and I know some of their community outreach people there. And so when my sister asked me about hospice for my mother, although she's not here locally, I called up this hospice and I said, who should we engage up where my mom lives? And they told me who, and within a day, they had actually contacted that hospice and had that hospice call my sister and reach out to my sister and arrange an interview with my mother. And she was qualified and actually receiving hospice services up there within a week.
Wonderful.
So, yeah, so it was, and that was just because of having a little bit of knowledge about how these things work and who the right people are to ask.
Well,
So,
that's one of the reasons why we have this program, right? And for anyone who's looking for more information about some of the topics we're talking about, you can visit planforthis.com and learn more there. And I just wanted the audience to keep in mind too, we're not giving legal or financial advice. We just want you to have a good frame of reference and some context about how living a long time plays out. And that's one of the reasons why I wanted Tom to visit with us here on the show. Independent Trustee Alliance is a proud nonprofit sponsor of Plan for This. If you are considering serving as a trustee, please visit trusteealliance.com to learn more about this complex and sometimes overwhelming job. trusteealliance.com. Plan for This thanks the Estate Sale Warehouse for all their amazing service and support. Entire home cleanouts, inventory, appraisal, auctions, sale of fine art and classic cars. Learn more at estatesalewarehouse.com. Tom, you've met so many people. Percentage-wise, I wonder how many of your clients and friends have a ready-to-go estate plan, do you think?
I would
Like
guess
you
it's
have
not
your estate plan now.
right. I guess I would say it's not more than 20%. I,
Wow.
I don't, I don't know for sure. There's no way to know for sure.
No.
But I frequently meet people who don't have anything in place.
Why do you think
And
people resist this kind of planning?
I think the main reason for most people, and this actually goes for life insurance planning as well, and looking into long-term care insurance as a solution. The, people in their 40s and 50s have a ton of things that are tugging at them every day to do that they absolutely have to do right away. And those things may not be as important in some ways as doing an estate plan. The consequences may not be as dire, but the consequences are immediate. So
Yeah.
everything that gives you a bad feeling or negative feedback in the short term gets priority over longer term concerns. I think that's natural and inevitable. So it's always a challenge to help people understand that they ought to set aside a little bit of time right now to take care of this thing so it doesn't come back to hurt them or their families in the future.
Yes. I remember when you and I got together, I was 47 and I had two young boys, and I was in love and knew that I would eventually marry my fella. So I was at that place. I was partners in my firm, in my business, with my mom and my brother. And I was looking for a way, because I knew these numbers. I knew the cost of care. I'd already worked with several families in managing this as their fiduciary. So for anybody who doesn't know, I have served many, many families as a private trustee and executor, and have had all the jobs, power of attorney for finance and agent for healthcare. And so I was really seeing it up close. And so I worked with Tom to get long-term care insurance for myself and also to get life insurance. And so for me, the long-term care insurance part was super important because I was working so hard to build up my business. And I thought, if I became ill and I'm alive, this is not about so much about my death, but it's really about being alive, not being able to drive a car, not being able to manage things on my own. What happens? How do things get paid? How do things work? And that's how we came to talk about my own long-term care insurance. I recognize the product that I have in particular is no longer available. But I want people to understand a little bit more about, long-term care insurance, at least in my mind, isn't designed to pay for everything. It's designed to supplement what you have. But could you explain also what happens if I never use it? If I never actually need the long-term care insurance to cover the caregiver costs and staying in my home and stuff like that, what happens? And do we have choices about that when we get a policy?
There's some choices. Your policy was purchased quite a long time ago, and I think you've already finished making all the payments on it, and it's a great thing to have. Um, um, I I haven't looked at your policy for a long time. So, but the
But
way
since it's not available, we don't want to tease anyone with that. We're just,
no, I
yeah,
would just yeah, and without speaking about your policy specifically, I would say policies of of that type generally you would pay a premium. Either you would you would pay a premium until you went on claim, or and if you never went on claim, you just keep paying premiums. And if you need long-term care, you would stop paying premiums and start collecting benefits. And those benefits would protect the rest of your assets. Let's say you're in retirement, it would protect the rest of your income producing assets and provide a separate stream of income that would be used to pay all or some of your expenses for non-medical custodial care if you're not able to take care of yourself. So a long-term care policy benefit kicks in when you're unable to or when you require assistance or backup assistance with 2 out of 6 activities of daily living. And activities of daily living are the things that all of us need to do when we get up in the morning. They're taking a shower, another bathing, that is, going to the bathroom, getting in and out of bed, getting in and out of a chair, dressing ourselves, feeding ourselves, having breakfast. Those are all activities of daily living. And if you require some assistance or backup or occasional assistance, if you require somebody there to offer assistance with 2 out of 6 of those so-called ADLs, activities of daily living, then you qualify to receive a long-term care benefit under your policy. That was the case for policies back when your policy was purchased, and that's the same criteria today to get a
and I,
benefit.
and I want to jump in
Yes,
and say, I want people to notice that driving is not considered one of the activities of daily living, right?
right.
And
It's not one of the 6.
it's not one of the 6. And so bathing and toileting, dressing yourself, feeding yourself is actually a rather executive process, isn't it? Because you have to make sure that the food is fresh. You have to prepare it. Maybe you have to stand at a stove for a while, right? And the idea is that you could probably live off microwave meals, but you also have to remember how to operate the microwave. And so, comes a time when you're really not able to manage for yourself. And hopefully you have a way in place for someone to even know that you're in distress.
We take for granted our ability to do so many things, and as we get older, some of them become more difficult. I'm older than I used to be, so I know some of those things. I'm not as
Yeah,
old as my mom, of course,
right.
but my mother, for example, uh, she can she can feed herself to an extent, but she has trouble swallowing now. I don't know how typical that is for somebody in her situation or her age, but she has trouble swallowing and she tends to inhale her food. So anything that gets into her lungs runs the risk of pneumonia and requires extensive medication and extra treatment. And she had an
Right.
incident like this not long ago. So it's just, yeah, she has to have assistance with all I would say all of the ADLs now.
Okay. And that's where she's at right now,
Right.
right?
And the other thing, besides those activities of daily living where you might need assistance and that trigger a long-term care benefit, if you have a cognitive impairment and therefore require some supervision, that's also a trigger for the long-term care qualification for benefit.
That makes
So,
sense. And
yeah.
so, are you seeing it, Tom, where people are buying life insurance with a long term care component or a long term care insurance with life insurance?
So it can come both ways. There are life insurance companies that have regular whole life and even some term insurance policies that have a long-term care benefit that advances some of the death benefit and makes it available to you if part of it is going to be if you need care before you pass away and you want to use some of your death benefit, you pull it forward and use it for care. That's a lot. That's a whole life, or let's say that's a whole life insurance policy with a long-term care rider. And that rider, you would buy a particular monthly benefit amount, and there wouldn't be the possibility to protect that from inflation. So you kind of have to choose your amount up front, and then you live with that, even if that rider wouldn't be triggered for another 20 or 30 years. So something that's meaningful in today's dollars wouldn't be as meaningful in those dollars far in the future
But we could
because
do
of
some
cost
math,
inflation. Yeah,
right? And we can figure
yeah.
out a little bit of that. If every 40 and 50 something in the world were listening, what would you tell them?
I I I would tell them to um, well, I think life insurance is important on its own, and that's kind of a perhaps a separate discussion. Um, and I think it's an underappreciated uh, category of products because it can provide a lot of protection, safe savings. The money that you save that way can be used for various purposes, not just when you die. But I think for long-term care, I would encourage people to look at it as part of their retirement planning, basically. Uh, of course, if someone is very interested in getting it at a younger age, that's fine. They would be able to acquire a policy and pay for it and have it all paid up and not have to worry about it anymore. And it would be available for them when they retire or earlier if needed. But I think that realistically, people will think about long-term care more when they're looking at their retirement because it's really a way of protecting the assets that you're going to depend on to produce income during your retirement. And it protects a couple age 65. There's probably a 75% likelihood that one of them will need long-term care.
Yeah,
And
I
that's a
see
pretty
that as
amazing
real.
statistic.
Yeah.
It would be really great for them to have a long-term care policy that would pay for those long-term care costs when they come up for either member of the couple, so that the healthy member of the couple can continue, and so the family can continue to live the lifestyle that they were planning to live in their retirement. Otherwise, let's say just for the sake of simplicity, they were planning to live on $100,000 comfortably together um, in their retirement, adjusted for inflation. What happens if one of them has requires custodial care and has a long-term care need? And what if the care for that costs an extra $100,000?
Right. And just as we saw today, right, we looked at the numbers, it could cost quite a bit
It could
to
cost
have that
much,
kind of
yes,
care.
it could cost much more than that. So I think having a long-term care policy is a good thing to do. The traditional policies back when you bought yours, you paid premium. If you needed care, you collected the care benefit that you had paid in for. If you never needed care, basically you really didn't have any benefit from that money because um, it, it it normally uh, didn't pay out as a death benefit, and um, normally that money would just have been lost, which is one of the things that made those policies a little bit difficult for people to buy because they just they said, well, what if I never need care? Is this the right thing to do? They just didn't always make that connection or make that decision. It was possible sometimes to buy a rider on the policies that would return all the premiums that you paid in to your estate.
Right.
And in that case, you paid a higher premium, but then all the premiums would be returned to your estate if you passed without needing care. But that made the product even more expensive than it was. That was
But
difficult.
I,
Today they work different. You could get a life insurance policy with that little long-term care rider on it, which is a good thing to do. But you can also get a specially designed life insurance policy, which has a rider on it that's designed specifically to make it into a long-term care policy. And typically, the way a policy like that works is you can again pay you could pay your premiums over a 5 year or a 10-year period, or you could buy it with a lump sum. So that eventually the policy is all paid up. You don't put any more premium into it. The benefit starts off at a certain rate and can be increased with and in my opinion, must be increased with a rider, a cost of living rider that increases it by 3% or 5% compounded until you actually draw the benefit. So you're not faced with a situation where you buy some protection in today's dollars, but by the time you need it, it's very small. I mean, this
right.
continues to grow. And if you need it for care, you use it for care. It means that you've leveraged your $100,000 of premiums. Let's say that's what it costs you for the policy, for $500,000 of benefit, tax-free benefit if you need care. If you never need care, most of these policies are designed to return all or a little bit more or almost all of your premium to your estate as a death benefit when you pass. So it's a much easier, I think it's a much easier conversation to have that, you're buying this policy. If you need it for care, you've leveraged your money by 5 or 6 times. If you don't need it for care, you get your wife or your spouse or your estate get all of that premium back. It's not lost.
Which makes a lot of sense. And I also want to add in the thought that staying in your home is very expensive. It's kind of counterintuitive, right? We think of eating dinner out as being more expensive than eating at home. And the fact is that receiving care in your home is more expensive than going someplace where care is provided. And with the calculations that I did for my own long-term care insurance, I could move to assisted living if I needed it, and it would cover all of the costs of assisted living. Just to give everyone a perspective, we talked about the fact that, per week, if you're at home, 24/7 care, $50 an hour is $8,400 a week. And assisted living costs about $8,400 a month. And so it's really a big difference if you're willing to go someplace where you'd have your own space where you could have solitude if you wanted it. But if you want to socialize, it's right there. And there are fun things to do and there are fun people to meet. And it really is a way of living as opposed to just a way of dying.
Right. I think that's really important. Uh, my mother, just to go back to her situation, she always was adamant that she wanted to stay home no matter what. But now I'm not sure. Well, I don't think she really is able, she's not really in a position to appreciate what she's accomplished,
Yes, not today.
which
Not
is
with
really,
her.
yeah,
Yeah.
which is really too bad because she talks about she sleeps with her purse and has her shoes on all the time now because she wants to escape to the neighbor's house.
Oh,
Yeah,
yeah.
she thinks she's being held in captivity. I don't know if she thinks she's being held at home or somewhere else, um, but it would be less costly to us to have her in an assisted living facility that had some element of memory care. It would be safer for her potentially as well. But we think if she were to be moved into another environment, it would, she probably wouldn't survive that because,
It'd be too disruptive. You're all in a routine. She has her routines and so on. But here's the thing. And if you can hear my voice and you're listening to Tom and I talk about this on Plan for This, I want you to think about the fact that you don't know exactly what's going to happen 40 years from now. We don't know exactly. None of us can know that. But you can still set your preferences down. And what estate planning is not about controlling the future. It's not about predicting the future. It's about setting your preferences. So if this, then that. If I'm faced with needing care 24 hours a day, 7 days a week, I want to give my team, the person I selected to be my successor, the professionals that help that particular successor, I want to put it in my documents to have some levers, some choices. If I have to go to assisted living, I would like to be in a place that allows animals. I would like to have a little dog, or at least a visit with. I don't have to own the dog. I might not even be aware whether I own the dog or not, but I know that cuddling, that kind of affection from an animal is very important to me. And by the way, I'm allergic to cats, so don't trade me out for a cat.
Right.
But, it's the kind of thing where if you can express those preferences, if you can think about it a little bit. So I want everyone to do a little thought experiment and think about yourself at 90 years old. Maybe you will still be surfing. Maybe you will still be driving. And if you're not, maybe there are certain activities that you'd really like not to miss. And maybe that's about pets. Maybe that's about plants. Maybe that's about something in your life that brings you joy and something you enjoy. And by the way, put dark chocolate on my list, right? So it's just important for us to think about that a little bit, make sure that we have our instructions in our planning documents. And Tom, anything else that you want to share? Anything you think would be useful to our audience?
well, along with making sure your wishes are clearly expressed in your estate plan and choosing a professional fiduciary or the right people to be in charge of the execution of your plan, it also is important to have the finances to have those wishes carried out because
Mm-hmm.
you can wish and hope for the best, but if the financial wherewithal isn't there to actually allow your successors and your trustee to carry out your wishes, then they're probably not going to happen. And the the long term for the purposes of providing long term care, a long term care um, combo life insurance type long term care policy provides that financing, and the one that I prefer actually pays a cash indemnity benefit. So the way it works is your doctor would say, yes, this person needs help with those activities of daily living or has this cognitive impairment and should qualify for a long-term care benefit under the mandated state regulations. And then the company would process the claim, and then they would, the way this particular company works is they just send you out a check for the full monthly benefit that you bought. They don't ask you who's going to provide your care. They don't tell you it has to be a licensed person. They don't tell you that it can't be a relative. It could be a relative. They don't tell you that if you'd prefer to go on a cruise rather than have somebody come in and provide care for you, that's not possible. No, you can use the money any way you want to, no strings attached. So,
Wow, those lifetime cruises are looking pretty good then.
yeah, you can use the money for anything. You can use it to pay for your grandkids' education if you want to. It's so it isn't money that is going to be wasted if you don't spend it on care, right? If you need the care, I mean, if you qualify for the care, you're going to get the money, even if you have other resources to provide the care.
Which is really one of the benefits of insurance altogether. You take a small amount of money and it's a much larger amount of money when it's needed.
Correct. And that is true, of course, of this type of policy. There are other companies that provide long-term care policies, also very good companies and very reputable and tons of experience and are great choices for people that provide what's called a reimbursement benefit. So they will reimburse your costs of care. That might mean that you don't pay the money out so fast for care,
Right.
but it also it does require that to get reimbursed, you have to use the money for care, right? And you have to demonstrate that. With this other kind of policy and the cash indemnity benefit, if you need care, if you qualify for care, if your doctor says that's the case, then they just send you a check.
Well, I appreciate that, but I am a little concerned because some family dynamics, the reimbursement way might be better.
Be safer.
Right?
Yeah.
Full cash might be better. So please talk to your professionals about these ideas. Again, we're not here to give legal advice, but I really want you to talk with your estate planning attorney. I want you to talk to your CPA, talk with your insurance agent. Please pursue this. Think about it. Schedule some time. Give yourself 3 hours on your calendar to think about and pursue and talk about what you can afford in terms of insurance. I'm pretty well insured. It gives me a lot of peace of mind. It helps me relax. You know, even as I make day-to-day decisions about my business as an entrepreneur, I do take some risks. But there are some things that I know are not at risk. And that is my peace of mind and my extreme old age, if I have the privilege to reach it. So, Tom, I want to thank you again for spending the time with us today.
My pleasure.
And hey, everybody, Tom's contact information is going to be in the show notes. You'll be able to find him. He's wonderful about answering questions. And I hope you take the opportunity to learn more from him if you can. Thank you, Bowtie Tom.
Thank you, Marguerite. It's great to see you again.
Money management and legacy. Will you be ready for